Hello value investors, thank you for joining me. Right now we're going to talk about Bed Bath & Beyond and why I believe Bed Bath & Beyond is undervalued. If you're new to the channel, don't forget to check out my marketplace on deep value returns on Seeking Alpha. I'll tell you the stocks I own and why with balanced arguments for the stocks I own. So in the interest of disclosure, Bed Bath & Beyond is a stock that I own, so I may sell out of the stock without giving you any notice. So there's some few things that I wanted to point out. I'm very familiar with Bed Bath & Beyond, but we're just going to go through in the next few minutes the main drivers of the story here. So Bed Bath & Beyond had that horrendous Q1 result where top line was down nearly 50% year over year, but that's because of the economy closing down in that period of March and April. So with most of the stores closed, obviously what was left was only online sales. Starting Q2 though, it's really dramatically improved, not only sequentially, but if you look compared to the previous year, it hasn't really been that close to break even for some time. The biggest driver I believe here is that adjusted EBITDA for this quarter was up 36% year over year at nearly 200 million for the quarter. For a company that's marketed at very close to 2 billion market cap, for it to cough up nearly 200 million in a quarter, I think that's quite substantial. Moving on. So there was a lot of moving parts this quarter, but for all intents and purposes, when all was said and done, Bed Bath & Beyond's cash flows were 750 million for the quarter. So over a 90-day period, it brought in approximately 750 million of cash flows. Now, this is a huge amount, but obviously it had the asset sale of personalization mall. So that was approximately, if memory serves me right, around 250 million. But the point to drive home here is that you have a market cap of 2 billion and the company in the 90-day period is bringing in more than 700 million of cash flows. I think that's quite substantial. Some other things that I wanted to talk about. So it's very difficult with the new CEO coming in, Mark Triton, to have a good gauge of what its sustainable free cash flow is going to be. But on the back of the envelope, if we look back to 2019, free cash flow was positive 300 million. So if the market cap is 2 billion and it's making in the ballpark of at least 300 million, I think that puts the stock a kind of around a 7 times multiple to free cash flow. So that's really, really cheaply valued. One more thing I wanted to touch about is that the stock is quite highly shorted and it's approximately 60% short. So it's going to be really, really volatile. But if you compare to a peer, it's not really a close peer, but if you compare to a peer like Williams-Sonoma, that stock trades at approximately 10 times free cash flow. So Bed Bath trades a reasonable discount to the market and a reasonable discount to a peer. Also, you have to bear in mind, I've got here written down, that they're doing still some further asset sales, which come maybe around 100 to 200 million coming in, plus liquidation of inventory of approximately 2 billion. So over the next 24 months, you have close to 1 billion coming in, which will be one-off non-recurring. But even if you add a conservative discount of 30% to that, it still means over the next 24 months, there's going to be a one-off or drip-in feed of 500 million. So if you think at the markup at 2 billion and recurring free cash flow approximately 300 million, plus this one-off 500 million from the liquidation of inventory, plus some asset sales, there's quite a lot of cash coming in for this company. So I've gone in a very breakneck speed, but I hope that you've enjoyed this video. As always, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. Thank you. Bye.